Hi, thank you for calling Unified Global. And I understand that you wanted to start your business and you want us to discuss to you some insights for you to be guided. So let me start sharing my screen. So let me discuss starting a business, specifically if your business is a sole proprietorship. Know what a sole proprietorship and is it right for your business? So first, you have to know if your business is a business or a hobby. For a business to be considered as a legit business, it should have these three characteristics. First is profit motive, which means doing the activity with the intention of making money. You should price your goods or services. You should be able to reinvest in tools that will help deliver your goods or services. And third is you should track your expenses. Second is regular and continuous engagement. This means you have to have a consistent operations, maintain schedule, meet deadlines, and operate year round, not just when you feel like it. Third is market presence, meaning your business should be visible to your target market. You should be able to promote your goods or services. And third is you should be able to engage with the community you want to serve with. So next is what is sole proprietorship. However, this kind of business structure has its own pros and cons. So first we will be discussing pros. First is the simplistic structure, which means it is very simple and it has the lowest cost of all the businesses structure that you can ever have. You also don't have to have your personal name on your business. You can do DBA or doing business as. And next is one owner. So it's only gonna be you, which means it's very simple and it's super easy to set up because you have no partners that you will be waiting for. Next is report on personal tax return. So another reason that this is very low cost is you don't have to have a formal registration for your business because your business will be reported under your personal tax return with your personal income. Third is you will be able to utilize deductions, meaning you can deduct things you usually pay in the ordinary course of your business. Take note, that should be very important. It should be on the ordinary course of your business and it should be necessary, meaning it should be beneficial to your service. Otherwise, we have to be very careful since we may be subjected to an audit by the IRS. So next is the cons. Unlimited liability. This usually mean that your personal assets are up for grabs, meaning if your business are being sued for some amount and your business cannot pay for that specific amount, the court will go to your personal properties and have them exhausted for you to be able to pay for the amount being sued. Next is taxes on profit. Example, you were able to earn $100,000 on the first year of your business and you were only able to withdraw 50,000 because you wanted to leave the 50,000 on the business for it to be invested and maybe for future plans. So take note that even though you only get 50,000 out of your business, the taxes should be based on the $100,000. That is the actual gross profit you earned or you made on the business. Yeah, that's kind of rude, but that's how the that's how the taxation for sole proprietorship works. Next is there are two types of taxes, the income tax and the self-employment tax. So basically the number one difference of this if you are an employee working for a company or a corporation is on the self-employment tax, you will have to pay 100% of it, meaning 15.3% of it. However, if you are an employee, the company gets to share half of it, meaning you only pay half of the 15.3%. That's around 7.65%, if I'm not mistaken. So yeah, it has a lot. It's an additional tax burden to you in addition to the income tax. And next is the estimated tax payments. So unlike if you are an employee gets to have their salaries withhold and the company would remit that taxes to the IRS on a quarterly basis. And if you are a sole proprietorship, you won't be able to do that. So we suggest to have a tax planning. We can do that for you. And with that, we can calculate your estimated tax dues on every quarter because the IRS operates on a pay as you go system, meaning you have to pay taxes whenever you make income as you go along the way. So for the tax planning, we do that and we calculate your estimated taxes due every quarter. So for you to avoid underpayment penalties, because the IRS have underpayment penalties for those who do not remit and pay their taxes on a quarterly basis or as often as you incur tax. So that does not necessarily mean you have to pay quarterly, but if we are able to compute gains or earnings rather than losses, then we would have to pay your taxes. So if you have some questions, I will be very happy to answer you. Nothing else? Okay. Thank you so much. You can contact to us anytime through our social media pages, emails, chats. We are very open to working with you. Thank you so much.